part of our monthly best practice series where we're bringing you relevant information for businesses, privately held businesses. And our first one, we're gonna cover planning for profit with Profit First's new approach. So Profit First has been out for somewhere around 10 years, and it's kind of like QuickBooks for small business. Similarly, Profit First for cash flow. So for small business cash flow, just like QuickBooks for small business accounting. I'm Tim Kenny. I'm a Profit First professional and CPA. And with that, we'll get started. So legal disclaimer, you're welcome to use any of this content. Just let us know that you're going to do it. A little bit about us. We like to think of ourselves as your partner without equity. We help business owners build businesses that support their fulfilling lives. We've got clients at all stages. Worthwhile plans take time to realize, and we work together with our clients to create those plans. They're the expert on themselves and their business, and we're the financial experts, and together we can create a plan that works. So today's agenda, new year, we're going to cover an important question. We're going to look at the traditional approach to working on profit. We're going to also look at the Profit First approach, and then look at version 2 of Profit First, and then have some time for questions and answers. So with that, so the question for the new year, because conceivably businesses, for businesses that are not for profits, is did they make enough profit? So if the answer to that is no, then two quotes come to mind. One is the definition of insanity by Einstein, in that doing the same thing over and over and expecting a different result. And the other one is by Ken Blanchard, and that's if you always do what you've always done, you'll always get what you've always got. So pretty exciting. I think Profit First, if you don't like your profit, it's a great way to ensure you end up in a better place, and you'll find out why. So traditionally, we approach profit this way: revenue less expenses equal profit. And the reporting that we use to measure that is generally a profit and loss statement. Best practice tool would be to come up with a budget and measure your profit and loss in comparison to the budget. And generally, this is the certified public accountant approach. Profit First came in and changed things, in that their formula is revenue less profit equals expense. So essentially, you're only using what's left over to pay your expenses, and you're allocating immediately as those deposits come in to a profit account, separate profit account. The reporting is designed with an entrepreneur in mind, bank balance accounting. I think if you polled 100 entrepreneurs and said, what report do you look at most frequently, they would say their bank balances. Best practice tool is a Google Sheet. So once the allocations are identified, having a Google Sheet where you're able to monitor and make those calculations easily and have that available on your desktop or on your iPhone is the best practice. And one of the banks that we like for Profit First is Relay Bank. credential is Profit First Professional. And so a little bit about Profit First's version 2. And I think it reminds me of a few things. So in the 10 years or so that Profit First has been out and they've had Profit First professionals working with small businesses, they've basically kind of come up with a scenario that incorporates the like Nike campaign, just do it, with do it now, which I think in our culture, we're bent toward immediate. And so specifically, version 2 of Profit First is called the Next 5, because in 5 days, you're launching Profit First, you're setting up the accounts, and you're moving money. So what that does, and the reason that this unreasonably quick start works, is because you see transformation unreasonably early, meaning you're seeing extra cash in your accounts sooner than you would expect normally, or you're accustomed to. You experience unreasonable return because now all of a sudden you're actually seeing profit grow in a separate account, and you're motivated to keep doing it. So everyone has probably seen that movie, Jerry Maguire. And so I just Googled what show me the money means. Someone wants to know how much they will be paid for something, or want to see evidence that something is valuable or worth paying for. So I think as it relates to the version 2 of Profit First, that immediate launch and getting it up and running right away, you're seeing immediate returns in your bank balance accounting as an entrepreneur. So within 5 days, you're setting up a separate profit account, you're setting up a separate tax account, and you're moving money into both of those accounts. Now, how much? So we're going to start small. It's going to be somewhere between 2 to 5% into each account. And you're going to make those transfers each week. So each week you're going to allocate and move. That's where the Google Sheet comes in to play, is those formulas are going to be set up. We'll set those up, and then you just enter your total deposits for that week, calculates how much to move to your profit account, how much to move to your tax account, and then on a quarterly basis, you're distributing 50% of what's in that profit account. So that's further motivating you to keep using the system. And one of my favorite books of all time is Atomic Habits. So we're starting with small habits. So like 2%, call it, and we're moving those funds. It's something that's very easy to do, especially with banks like Relay, but you could pretty much use any bank. And so these small disciplines, and then you're seeing a large balance, because over time that's going to grow. And then you can use your profit distribution to pay down debt, but to further motivate you, use it for something that you're going to enjoy, something that you're going to remember. A lot of business owners will use it for a vacation. And then the other aspect is in the tax account. So one of the frustrations of owning a business is sometimes you end up with a tax bill and no money to pay it. That's not the case with Profit First, because again, you're moving 2% of your deposits each week, to the tax account. So when it comes time to make those quarterly estimates, you've got money sitting in account. So there's more to Profit First, and it works, I think best when you implement quickly like this, but there's an assessment tool where we'll come up with, based on your historical, a plan to grow profit and target income. And that's something where we use more of a traditional CPA type budgeting process where we're looking at revenue and peeling the onion and looking at what your widgets are for your business, and then planning on how many you're going to sell and the cost and all that. Expense analysis, we're going vendor by vendor, looking at which expenses can be cut, which ones are critical to earning revenue, and which ones can be replaced by cheaper but just as good options. And so it's really a strategy for continuous improvement where you're seeing results immediate, especially with the Next 5 approach to Profit First. So these are the percentages, and you can see this top row is by revenue range, and that's essentially how these targets are organized, because every business is different, but Profit First, and that's really where experience comes in. You can identify, certain direct expenses and come up with a real revenue number. But essentially, for example, if your business has, say, 2 million in revenue, your allocation ultimately want to be 10% to a profit account, 15% to your tax account. And so sometimes businesses get there and there's an opportunity to exceed the targets. And so that's where the continuous improvement comes. And as you grow the profit of the business, you grow the value of the business. So that's essentially version 2 of Profit First. So we've got plenty of time for questions, and so I'm going to just stop sharing my screen and open it up. Feel free to chat questions, or if you want to unmute yourself, go ahead and do that and ask a question.
I guess I'll break the ice. Tim, would you talk and speak to the Google Sheet? Explain that better for me.
Sure. So Google Sheet is similar to Excel. If you were looking at a Google Sheet, it would look like a Microsoft Excel document. The reason that I suggest Google Sheet, and we use Google Sheet often, is because it's available to most businesses and at no cost. Generally, it's easy to deploy as well. For example, most will have an iPhone, and you can download a free app and then access the Google Sheet there. So oftentimes entrepreneurs are, working on their business after hours, and they may not be at their desktop. Hopefully they're at home. And so this allows them to access from their iPhone and do the work of figuring out how much to transfer and making those transfers. Does that answer your question?
Yes, it does. Thank you.
All right, well, great question. Anyone else? Has anyone used Profit First in the past? Or something like it? Right. This is a quiet group. I'm
Well,
gonna,
one second.
okay,
Uh, could you speak to this bank, Relay Bank? Where is that located and how do you access it and what's the pluses and minuses of using Relay Bank?
okay. Um, a good question. So, um, as you can see, and I'm gonna go back to the target screen. So, the Profit First targets coincide with a separate account for each of these. So there's a separate revenue account that all the deposits come into. There's a separate profit account, owner comp, tax, and operating expenses. So there's there's 5 accounts generally, and the reason that Profit First is a good fit for Relay is they have no fees for additional bank accounts and low fees as far as transfers and what have you. And adding an account is very easy. So there's instances where, say, a business wants to add a piece of equipment. It's very easy to add a new account for that equipment and then start allocating some of the deposits to that account. So essentially it's ease of follow through as well as low fees. And then the technology supports Profit First from the standpoint that you can set up automated allocations. So when the deposit hits, it will automatically move 10% to profit if you're a $2 million business, 10% to the owner comp account, 15% to the tax account, and then 65% to operating expenses.
All those accounts, checking accounts or savings accounts?
They're checking, but you can add a savings or you can add credit cards as well. Good question. So I'm just gonna, any other questions? Those are 2 great questions. I'm gonna just review a couple things in here with some of the extra time, unless anyone has another question.
Tim,
Yeah,
obviously, I've done a lot of working on the business. So I do this kind of thing like within QuickBooks, as you know. But I don't do the profit thing. And I have accounts in QuickBooks, but it's more manual. So what I hear from this is that this is literally like going to happen automatically, like you said it to happen, so that you don't say, oh, I'm getting nervous, I don't want to move this over. Is that kind of what you're saying here?
right.
Like
You know,
you actually make it happen.
yeah, you set it up and forget it.
Yeah. That sounds scary to me.
Yeah. It definitely can be. You know, but that's some of the genius of the new approach, I think, for Profit First, like this version 2. It's a 5-day startup. I mean, most business owners are so busy that once they like they may have an idea, start implementing it, and then just the cares of the business pull them off of it, and then they forget that they even started it. Versus like this immediate approach, you're up and running in 5 days. you're moving money, you're seeing the results in deposits to an account that's called profit, to an account called tax. And maybe it's something that you struggle with. Maybe, you end up every year with a big tax bill and no money to pay it. So that is going to resonate. So that's why this version 2 is geared toward, let's get these two accounts set up. Let's move money. Let's start building balances in them. And then moving to kind of work on making a habit. So each week you're moving, allocating and moving, and it's easy. And then you're solidifying your motivation to keep it going by distributing 50% in the profit account. So if you actually lay it out on a spreadsheet, you're going to see your profit account balances grow, because you're going to leave 50% in there, and then you're going to accumulate another quarter worth of profit allocation. So there's a lot more to Profit First than that Next 5 version 2 approach, but what we found is that is the way to launch Profit First, and it's effective as far as getting someone immediate results right out of the gates. Does that answer your question?
No, it does. I guess what I see is like a potential issue, and this obviously isn't the time to talk about it. Like, there's ebbs and flows in your year. Like it's not always the same.
That's
So
right.
sometimes you have more in one category than the other, like taxes come at a certain time, and I get it. So I mean, obviously that would require planning with you to figure out exactly how you'd want to do it.
Yes, and that's why it's based on collected deposits as well. So it's only
Yeah.
based on the funds that are coming in.
Yeah, I mean, it's just it's very interesting approach, and obviously I read the book and everything. I just never implemented it to this extent. So it's takes guts, I guess.
Well, it's hard to stick to the plan. So I think this next version of approach to it just makes it a little quicker and a little easier to stick with it, because you're
Cool.
kind of building on it.
Yeah.
With the idea that, within 5 days, that's a good period of time.
Okay, one more question.
Sure.
All right, now those 5 accounts are automatic, but can you pick and choose and say, I'll have just 3 of the 5 automatic, or 1, or do they have to be all 5?
No, you can shrink it. Generally, if a business is going to shrink it, they shrink it to a profit and a tax account. And then they've got one account to handle the others. So that's a good question. And while we're talking about shrinking the accounts, some businesses will have more accounts. So like I've made an example about an expensive piece of equipment, or let's say that the business wants to save for a down payment on an office condo. They would potentially set up that additional account. Maybe it's account number 6 for the savings geared toward office condo, and then they would make an allocation. It could be as small as 1%, but it's an allocation, and over time that balance is going to grow. So it's that whole idea of eating an elephant one bite at a time. It's also, I think, psychologically powerful for business owners, especially when they feel like they're overwhelmed by their finances. You know, if they see money in an account called profit tax when they log on to their bank, you know, each day, I think they're gonna have a little sense of more peace with that. Good questions. Any other questions? All right. Well, thank you all for coming, showing up as half the battle, and we'll have another one next month. And the recording for this will be out on our website in probably the next week or two. So thanks again for coming, and here's to a great 2025.